The NBA.com, this is Joe. This report is for the 20th. Well, we had a modest inside day there. Shot up big time because the Fed has decided to do QE on the light side by just buying up treasuries because nobody wants them. They'd rather buy AI company debt and kind of left a hole. So they had to fill it by buying it themselves. But rates are continuing to rise, so that's problematic. De facto, without the Fed actually raising interest rates, because I'm sure they don't want to hear from Trump about raising rates. However, Trump has created the situation because he created the oil problem, plain and simple. So you got to own it when you are the one doing it. And you can see what that has caused here from a short signal. Uh, MBI red below green. Yeah, that's a short configuration. We were already at a DOC spread that started back here. So that's where that initial signal came from. From my view, then it's one of those where you wait for the pop up of MBI red. It actually made two runs before it started its move back down lower. Once magenta got below 25, though, you would expect this to accelerate. So that is the question mark. The saving grace for it is we've had rising gold here, been enough to sustain it, but now shakeout dangerously at the zero level here, 0.52. You dip below zero, and yeah, then I'm expecting the 50% move. So be aware of that. From an NQ standpoint, likewise, you can see it right there. Don't have the green line on. Easy enough to do that. You just edit the indicator. You go to the line, in this case, the dark green. You just change the 0 to a 1 and push OK, and it will, boom, there it is, right like that. So, piece of cake, but also shows you the exact same configuration. So, everything's congruent from that standpoint. Um, you don't have an expanding spread between cyan and the green here. Cyan is sort of faded. If that expands or you get a move up of orange, then yeah, I would expect that we're going to see a bigger drawdown in price. The bigger factor, oil continuing to climb as Trump announces even more economic sanctions against anyone who does anything with Iran. It's not going to work. I think he's pretty much admitted that they've lost it from a military standpoint. There's nothing more they can do, or nothing more anyone's willing to let happen from this stage. So, yeah, that's pretty much decided that. Super exciting for the euro from their standpoint because they see QE as a clear sign that they were right, that the U.S. economy is falling apart, and they're so excited because they're doing so well. Yeah, they're just narratives. At the end of the day, you have an imbalance because at the end of the day, now nobody wants a dollar. So you've got some choices. You've got Bitcoin, you've got gold, and you got euro. Those are your choices. So kind of split it amongst all of them. Gold saw a huge move. We expected this from gold. There's no question about that. That's a separate issue of the devaluation when you're going through, $1 trillion every, 60 some days. You're now at 40 trillion. The death spiral's already begun. So how they're going to offload into some other form of debt balancing, we're all waiting to see. Otherwise, it's going to come crashing down, and that's not that far away. This has spiked Bitcoin. In fact, just a big move this morning. When I first popped in, we were at the 69 range, so now we're up over 71.5. It's moving and moving quick, and we knew this was going to take place. We saw this compression. We knew that always leads to an explosion. We've seen this basing. We know that nobody else is willing to sell. So now, if you're thinking, hey, I got to get out of dollars and that and move into something else, now you see why it's actually taking a little bit of a move. Now, just to bring perspective, we follow this little red line back here to the positive extremes. We haven't even filled them all in. So, you'd have to go back all the way over here to get to the rest of the positive extremes. So, it ain't even dipped. This is nothing. So, not even remotely getting excited about that from that view, which kind of funny from that standpoint. Now, from a 5K standpoint, it was really still quite beautiful. I mean, buy signals come in, we get the little brief, but then there's that separation that I've been talking to you about, the MBI white to magenta, and that boom, that was a huge takeoff, and then the breakdown was magenta. But see, in this case, you look at the shakeout, you say, I'm not willing to necessarily think that that's the end of it. But once you get below 10 on the shakeout, well, then when you start to see MBI white lead, that's where you take your short, and you get paid on that one. You get a brief move up, but here, once you have MBI red leading over magenta, the MBI white goes over, that's your short signal, and boom. Uh, it's getting nice and early. And then it just basically was back and forth most of the day. It was a little bit cleaner as we got towards the end of the day. And then here we are in pre-market. Asia was nothing, in Europe now it's a little bit soft. I would expect that to expand. What was more interesting is I was playing with my 2500 tick chart. Let me get rid of my ABM here that I was playing with real quick. But from a 2500 tick chart, same situation, but a lot cleaner in the runs. We're able to identify those short zones, follow it through, and these are all pretty sizable runs. But now we're getting into the point where we're like literally just a few moments for every candle to form. 2,500 ticks goes pretty darn quick. So it becomes quite explosive. And then when new buys come in, the carry through on that. And what you begin to realize with the Fibonacci lines, you can trade zones. You get to a point where it's like, okay, you've got a stable zero. You're looking for the 100%. You got a stable 100%, you're looking for a return to the zero. And then likewise, this one was very interesting because we were expecting a move to break the zero from here. Created a little bit of a divergence. Was an opportunity to short a little bit earlier on that breakdown, took that opportunity, and then boom, collapsed all the way to the zero, made new lows at that particular stage. So a lot of good stuff. It makes it fun to be able to be that tight to price action and clearly be able to define it. And then you can see the same situation in the inverse category where you have the DOC spread and the expanding spread between green and cyan. You expect your follow through breakdown until your orange gets down there. And here was an interesting one. The orange didn't break below, so you knew that that was going to fail. Sure enough, made new lows. Then you got a secondary, and you ended up with the P2 pivot. So at that particular point, you're at such a tight range. This is something that working with the code where, to me, it's just better to take that short at the zero, close out. And even if you're in a gray zone where you're not doing anything until you break the 23%, I consider that kind of fine. Another one I thought that was really cool, within this long setup, the separation of MBI white to yellow is always bullish. So even when we ended up with this dip in that, I was kind of laughing because I'm like, oh, this is just a fake out right before the close. This was like moments before the close. And then boom, it shot up. And that was congruent. But at that point, the spread narrowed between white and yellow. And that's when you ended up with a bit of a dip from there. And then, of course, we opened up post-market, went higher, but still filled that all the way back. And it's funny because when you look at the 0 to 100% range, 22 points. So that means 0 to 50 when you're looking at those from an expectation standpoint. A little over 10 points. It's an 11-point move. So that's where something like capturing that at the 0 versus waiting until you're at the 23 to 50, it adds up over time, 5-6 points here and there. But in total for the day, it was 126 points, I believe, was the number. So that was a pretty good day. Most of the days we've seen within this 25 that I've been looking at are all 60 to 80 point days without much difficulty. Even in a simple move like this one. And again, it's beautiful because again, you have the dip of the red, moves back up. That's your opportunity to start jumping in. So right around that 42 range, And then, well, now it's already down to the 21, so the market's not even open, and you're getting close to 20 points off of that kind of setup. I have it in strategy form probably before the end of the week, where it's actually like set numbers. Actually, may even have it later today. I've done several of them, but just adjusting the iterations to add in some of the language for checking account numbers, blah 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 blah, so that it does everything automatically without having to think about it. But very cool, and you can see that spread widening, and the degree of drop accelerates. Very powerful stuff. Anyway, that's long and the short of it. Just thought I'd throw out what's going on with that. That's why these pink bars are different than the others, simply because it's a reflection of the adjustments, and don't show that on the current PNT2A, which is what this one is. It's the standard one. So anyway, have a good one. Trade well. We'll talk in later.